This is the Definitely Uncertain podcast, brought to you by Gold Rock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. This is the Definitely Uncertain podcast, and my name is Darren Rockman, and I'm a partner at Gold Rock, the more than 20-year-old multifamily office servicing high net worth families in Israel and around the world. The Jewish Agency for Israel expects over 15,000 Western immigrants to move here this year. That's nearly 2.5 times the 6,000 or so immigrants who came from developed countries in 2023. And obviously, this is a response and a result, in some measure, to the events of October 7th. At the same time, there have been significant changes to Israel's tax laws with respect specifically to new immigrants. And to help us understand some of the implications and the whys and wherefores of how particularly US people should approach moving to Israel, I'm very happy to welcome Fred Kahn to the podcast. Hi, Fred.
Hi, Darren. Thank you very much. Thank you for having me.
It's great to have you on. Fred is the CEO of Philip Stein & Associates, which is a leading firm providing U.S. tax services in Israel. He moved to Israel with his family in 2005. He started his career at Ernst Young, what was once called Ernst Young, now EY, in New York, where he specialized in hedge funds, and he's been with Philip Stein since 2013, and today he runs the firm. And so Fred is really an expert when it comes to matters of U.S. tax, and specifically U.S. tax for Israelis. So let's start with this. When people are looking to make Aliyah, when they're looking to immigrate to Israel from the United States, there are a lot of complex parts to this. And I'd like you to tell us what you think are the critical issues that potential immigrants to Israel should be aware of.
Okay, so I'll tell you really there's two main types of U.S. immigrants that we service, and I want to sort of separate them because they're going to be different answers for both of them. The first type is more pensionable age, let's say age 60 and above, that, as you said, really are looking at Israel as a place to retire. Typically, they have one child that's living here already, and for them, the majority of their income is passive income. So for them, the planning is really, first of all, critical issue is can you break residency from whatever state you're coming from? If you're coming from New York, New Jersey, California, Maryland, those types of states, that can be quite a significant savings. And the critical issue is planning for that to make sure that you really have broken residency. Some of those states love their residents so much that they don't want them to leave. And they can be
They love them and they love their tax dollars.
Yes, they love them, and their worldview is that even if you moved, you still love us, and you still are going to come back to us one day, and we'd like you to make your tax home be California until you're passing. So there's careful planning that needs to be done to break residency for those people. Additionally, for those, because if they're having passive income, they're holding an asset for a long time, they want to sell that asset, they can save state tax if they wait until they make Aliyah to do it, which can be quite significant. It can be, let's say, 13% in California can be saved, so it's quite significant. And the other is actually, this might sound funny, but making sure you actually made Aliyah and you are a resident of Israel. People sometimes have.
So let's just define that. Different places have different residency rules. What does it mean to be a resident for tax purposes? And in the U.S. context, what does that mean practically?
So there really are, it's funny, there are 3 different definitions that we have to deal with. I'm not going to bore you with all 3 of them, but each state of the 50 states has its own definition of residency. That's one. Then you have the U.S.'s overall definition, and you have Israel's definition. So what we like to tell people to simplify things is the golden rule is if you're spending 183 days in Israel and you are an Oleh, then you can count on really being a resident of Israel. In the treaty, there's something called the tiebreaker rule. I think in all the treaties that the United States has with all the different countries in the world, Oleh is used only once, and that is in the context of someone that moves to Israel. It's a word that makes it into the treaty. And when it comes to tiebreaker provisions, if you've really been here and you can claim that your center of life is in Israel, you've been here 183 days, then the Oleh would carry you over the finish line to say that you're a resident. But some people, especially the way the world has been dynamic, they make Aliyah and then they love Florida and they're in Florida for 250 days that year. So that's a problem. Then,
Right.
Some of the benefits that come along with Aliyah, you might not be able to claim residency in Israel because Florida loves you then, or California.
So you would still enjoy the benefits of Aliyah as an Oleh in Israel. However,
Right.
you may still be saddled with your U.S. state tax because you haven't managed to break residency in the place you've come from. And you end up in this somewhat weird situation, if I've understood you correctly, Fred, of being actually resident in two places simultaneously.
Correct. Not only that, Darren, but you said correctly, your 10-year holiday, which Israel gives you, that starts when you make Aliyah. Even if, you say, hey, I'm going to be most of the time in the U.S. for unforeseen circumstances, it's very tough to stop that clock. It's possible, but it's very hard. The other thing that people need to take into account is one of the most basic benefits that an Oleh, especially talking about a pensioner, gets is Social Security, for example, is tax exempt in both the U.S. and Israel when they make Aliyah, which is a very, very nice benefit. Social Securities, annuities. So you need to actually be a resident of Israel to take that benefit. If you're not a resident of Israel, then you're back in the U.S., which your Social Security is taxable.
Right. I want to pick up on one point you made there, and it's more an Israel point than a U.S. point, but you'll be familiar with this. You said when you make Aliyah, and from a tax perspective, making Aliyah is not necessarily when you take out a Oleh certificate and you show up at the Interior Ministry here and say, hey, I would like an Israeli identification card. From a tax perspective, you can be an Oleh even though you don't have citizenship here. Is that correct?
What I'll say is correct is we've had people, to make it a little more extreme, that they've already used their entire 10-year holiday before they make Aliyah.
Right.
Meaning Israel considered them a resident for 20 years already. Their 10-year holiday is gone, and suddenly they decide, I'm making Aliyah.
Yeah. So there are two clocks running in parallel. There is a citizenship clock, which is really very often up to the individual. He can keep deferring that date for a very long period of time. But the tax clock is a different one. The tax office says from the day you are resident in Israel, which is, as you said before, let's assume for purposes of shorthand, 183 days. At that point in time, your 10 years has started. Did I get that correctly?
And Israel is actually making it's less than, Israel is so loving that even less than 183 days, very often they'll claim you're a resident. Certainly if your family was here and you've been more back and forth, they'll settle for a lot less days to claim that you are a resident. And some people come to us excited that they're making Aliyah, then we send them to a tax advisor in Israel, and the person says, you can print out your ins and outs of Israel from the Ministry of Interior, and they'll say, you actually, according to Israel, were a resident here for 10 years. You have no more benefits coming your way.
Right.
So it's important to keep mindful of that, and going forward to remember. Unfortunately, amnesia can set in very quickly when we put tax planning on the table, and then life comes in and people say, oh, of course I'll be here 183 days. And then, I don't know, they get tickets to the NBA and they're there, and then their team is doing well that year and they stay. Things can happen.
Yeah. And we both have seen mistakes that people have made when they have woken up, many years later and said, okay, I want to start my 10-year tax-free now. And you say, well, I'm terribly sorry, Mr. Cohen, but you've already finished it 2 years ago.
Yes, exactly.
Yes.
That definitely happens. And it's unfortunate because there is planning that you can do with the 10-year holiday. Now, just keep in mind, though, if you're an Oleh, also it does give you certain advantages for claiming residency in Israel. So if you're here less days, but you actually get that Teudat Oleh, you do have the upper hand when claiming it. If you're just trying to claim it based on days, then you can really be pulled in two ways much more easily, actually.
Right. And I think we should just say, and maybe we'll say it again at the end, you know, every case needs to be looked at specifically. Yes. There are no general rules here. And so facts and circumstances are important, but these are sort of some sort of general guidelines. I want to raise something that I was going to pick up later, but we'll do it now. Israel is actually changing its rule with regard to the 10-year holiday. Until now, an immigrant to Israel had effectively had two benefits. One is they didn't have to pay any tax on passive income earned overseas. And the second thing was they didn't need to report on assets overseas. How is that changing? And what are the implications for people considering making Aliyah?
Okay, so this is an important change, and it's important to know this has been debated for many years. This change that's actually going to come into effect. It's going to come into effect for people that make Aliyah after January 1st of 2026. So it's coming fairly soon, the way we view it, because it takes a while to actually make Aliyah. So it's coming fairly soon. And the biggest change is really in the disclosure area, where you need to, as you said, until now, you made Aliyah, Israel relied on the fact that you were doing everything properly with them, and you were disclosing to them that which needed to be disclosed, and you were properly reporting that which needed to properly report it. Most importantly, when it comes to actually to active income, which was the other type of OLED.
Yes.
Meaning there are lots of different ways to interpret and how to allocate your income. Let's say you're an attorney coming to Israel and you're going to spend 150 days in Israel and you'll spend more time in the US, or you're going to spend 250 days in Israel, 110, let's say, in the US, 5 days abroad, let's call it. So very often those type of people, they're saying, well, the days I spend in the US are much more valuable. So they want to change the way they allocate things. And Israel doesn't necessarily agree with that. So until now, you didn't really need to tell Israel how you came to your number that you allocated to Israel. Until now, you just told Israel, hey, I've earned $100,000 in Israel and you paid tax on that. You didn't tell them that you earned $5 million in the US and didn't tell them about that.
Right.
So what Israel has been asking for a very long time is, we're okay. You want the exemption for the days outside the US? No problem. But we want to know how you came up with that allocation now. Instead of just telling us about the 100,000, tell us about the 5 million, just so we know that it's exempt, because we might have what to say about that. And I think that's going to very much change people's planning, because it's one thing to get, let's say, a tax memo from an attorney saying we're comfortable that this is a position. There's another thing to put it in front of the ITA and say, this is what we're doing. Yes. Because they are known to, if they see the large majority is being allocated outside of Israel, they want to have a second.
They may have a question or two.
Yes, they might have. It's a good way to put it.
And I think it's also worth noting that the same planning questions that people with income have to deal with is also true with people with passive income, because the planning opportunities that people have at present before this change have been vast. But once the disclosure is really from day one to the tax office, then the flexibility that people have definitely is shrunk.
It definitely shrinks. The passive, I'm more optimistic about, because the passive is a real exemption. The active, when you start allocating, that the ITA is going to have lots to say about.
Yes, sure.
Because their position is you go based on your days. That's how you allocate things. And most Olim, they still feel that their days in the US are much more valuable, or they want to say something is passive when it could be viewed by the ITA as active, for example.
Okay, so let's move beyond this. There are strategies which you have been working with for many years now for US people to reduce the income they pay, the income tax, I should say, that they pay after they move to Israel. Do you want to tell us in sort of very general terms, what are some of those strategies?
Sure. The one we hinted to right away, the most fundamental really is state taxation. Meaning right away, again, if we're not dealing with a real estate asset or an active business in the U.S., right away, one of the tax savings that we really try to employ is to make sure that they defer any significant events until after they break residency from a state. That's a basic one, but it can be quite significant in terms of the savings on it, because typically the states that people make Aliyah from are the highest taxing states in the United States. So there's a lot of savings to be made. Social Security is another biggie, I would say, that you really need to do planning for. And the third is really planning to prevent collisions, I would say. Not necessarily
not car. We're not talking about cars and bikes
here.
here.
Not car collisions, but possible tax collisions, where unfortunately the U.S. internal law and the Israeli internal law don't always have a perfect meeting place in the middle. So if you don't do certain planning, you could wind up in a situation where both Israel and the U.S. want to tax a certain tax event. So we'll work with people just to make sure that at least we have an agreement that both states aren't going to tax you on it. At least we're going to get a full credit. Also taking into account possibly Social Security and Bituach Leumi here, who sometimes want to get a piece of everything. So those are the three most important, I would say. It's really state, Social Security. I'll talk about annuity a little bit also is a biggie. And then the last is preventing double taxation, which hurts the most to people. That's where really, if they have to deal with that, that can be quite painful. So we work a lot with people just so the two regimes really can understand each other.
Yeah. Okay, great. We've seen over the period of the last sort of 15 or 20 years, quite a number of Israelis move to the US and then return, and that many of them end up working in the tech industry. And some of them have come back with equity in the companies unrealized equity in the companies which they work or have worked. And that is true also of Americans who work in tech. There are lots of opportunities here in Israel, and they come with those shares or those options. What are some of the considerations that people with those types of assets should focus on before they move?
Right. We've been seeing a lot of that, by the way. We've seen a lot of tech. I am actually very proud. The Israeli dream is actually to go to Israel to make a lot of money in tech and then to return to Israel, which I think is very nice.
Go to the US, make money in tech and return to Israel. Yeah.
So that is nice. Unfortunately, you have to be very careful when you're doing that to make sure that Israel doesn't welcome you with open arms and say, "Oh, you're back. We're going to tax you now on your exit." So you have to be careful of that. If you start, and it's important to be careful to understand what type of equity you have. Do you have, let's say, founder shares in the company, or do you have options in the company? If you have founder shares in the company, very often, if it's a U.S. parent company, you might have something called 1202 stock, or a qualified small business stock, which the U.S. gives you a $10 million exemption on, which is and that can be multiplied. So if you have that, you want to make sure that you're protecting that from Israel. So the exemption is a bottom line exemption, meaning until you get the money in your pocket, you're going to get that exemption. The exemption is less exciting if Israel says, "Okay, you're not paying U.S. tax, but now you're in Israel."
We'll take thing. Thank you very much.
Right. You just basically are not paying. So we work with people to shield those assets in that case. And with options, you have to even be more delicate in terms of the vesting of those options, who has first right of taxation on those options.
Right.
Possibly a state wants to claim also that they have, of course, as we said, they get a piece of them also. So tech, it's the equity is a very sensitive place, and you can go from being taxed at zero, meaning a person could have a zero taxation rate because of qualified small business, and Israel could say we want 50%. You have to plan properly, and we do a lot of work with people coming and going about that.
Okay, very good. Another of the dream Aliyah scenarios is to come to Israel and to continue to work for your U.S. employer. Because, hey, who wouldn't want to the cost of living in Israel and the income that is offered on Wall Street. What are some of the important issues that people like that have to keep in mind? And specifically, I'd ask you just to touch on this idea of a permanent establishment and what it means both for the employer, so for the employee, and also for the employer.
Right. I think first of all, you're on the money. The starting point of the conversation typically is permanent establishment. If you're working for a very, very large company, then we want to understand, is your move to Israel subjecting that entire company possibly to Israeli taxation? So everyone understands permanent establishment means that if a company has one employee or an owner, someone very involved in the company in Israel, in theory, there's a potential exposure for that company to Israeli taxation. So some people take the view, I'm not that important in the company. Maybe I don't have I'm not exposing, my entire company to Israeli taxation. But some people are significant. It comes up very often with partners in law firms, for example.
Sure.
What do you do? So first, you want to come to an agreement with your employer. What are we doing? Can I still be an employee, or do I need to be an independent contractor now? If you need to be an independent contractor, so there's a whole bunch of options that you can use to become an independent contractor. You can open up an LLC and go through the LLC. You can open up an Israeli Chevra Bam, an Israeli company, and get paid through that. You can get paid possibly through one of the payroll service providers here as well. There are a whole bunch of flavors that you can add to that, and there's a lot of planning that can be done with that. But the starting point is, can I stay an employee of the company or not? Some employers say, I'm not worried. You're not so important to us. Don't worry. You can stay an employee. And we've gotten guidance from our tax counsel that it's fine. Others are much more conservative, and they want to make sure that you're far away. You're not an employee. You're not a partner. And sometimes you can actually save on them, because remember, if you're actually an employee, for example, in New York
Yep.
will try to claim taxation because of something called convenience of employer. Whereas if you're an independent contractor, you might be able to break that. So there can be benefits in it as well. But that's the big point.
Okay, great. I'm going to ask one last question, and it's a biggie, and that's with respect to U.S. citizenship. People making Aliyah often are hesitant to jettison their citizenship, their home citizenship. Israelis, for some reason, like to have second passports, and Americans particularly like to keep their passports. But that said, what are some of the advantages and maybe some of the disadvantages for a U.S. person living in Israel renouncing his U.S. citizenship?
Okay, so this topic actually has been, we've seen the ups and downs in this topic over the past few years has been quite a soap opera, I would say. You have peace, then you have war, then you have COVID, lots of things pushing this topic.
This is what tax people call a soap opera.
We've had very emotional conversations with people
there
about
you
this
go.
topic.
Emotional conversations. I like that bet.
I really would say there are not a whole lot of tax benefits to U.S. citizenship. The biggest tax benefit, you might laugh at this, to being a U.S. tax citizen is that if you have U.S. situs assets, real estate there, corporate stock, then you have a $13 million exemption on those assets upon your passing. If you give up the U.S. citizenship and something happens to you, $60,000 and that's it, which can be quite painful. So you might laugh. That's actually the biggest benefit.
Yeah, but it's not a benefit to you. It's a benefit to your children.
Benefit to your children, but it does give
or spouse actually.
Or spouse, right? Correct. So it does give you. People keep their citizenship typically if they have one child in the United States. They want to know they can go there anytime. That's why they keep it. Yeah. But the only real benefit is it gives them some estate tax protection. The negatives are many.
Too numerous to list at this podcast.
The other benefit is you can be a client of our firm, because if you're a U.S. citizen,
which is a great benefit to Fred and all the wonderful mouths he feeds.
But there can be giving up citizenship is a hot topic. We've definitely seen people do it. I've even heard in the tech world here, some people they don't want to start a company with a U.S. citizen because of all the new filing requirements their company might need to deal with that because they're a U.S. citizen. On the other hand, if you're the one that needs to relocate to the United States, you're going to get there a whole lot faster than someone that needs to apply for a visa. So it does have that benefit, but we've seen a lot of up and downs on the giving up the citizenship.
And the benefits, you don't have to report in the US, you don't have to pay in the US, you're not subject to a state tax on your worldwide assets.
Yeah, they're very significant. You can, during your 10-year holiday, if you're no longer a U.S. citizenship and you're much more similar to the U.K., Australia, anywhere else where you're making Aliyah from, your ability to really maximize the 10-year holiday is vastly greater if you no longer are a U.S. citizen.
Let me stop you there. Even an American, even if he gives up U.S. citizenship, should not be equated with an Australian. Let's just be clear.
I apologize.
Please. Okay. So that is something. Now, of course, there are limitations to giving up your U.S. citizenship, particularly for people that have significant assets in their name.
Correct. They are very significant. If you're what's called a covered expatriate, then there's quite a nasty tax on that. We've done a significant amount of expatriation work the past, let's say, 10 years. And I would say 90% are what we call the non-covered expatriate, where there's no exit, there's not paying any exit tax. If you're covered, then it's a deemed sale of assets and distribution of pension, which can be quite significant. So you want to be careful about that. There are certain exemptions, for example, for accidental Americans, you might call it, or someone born with dual citizenship, where you can do it, or you gift your assets to a spouse. There's planning that can be done, but for the average U.S. husband and wife making Aliyah with assets, it's very challenging to make Aliyah, especially if their kids are U.S. citizens. Then they don't do it. But the planning that can be done, and when you start running the numbers, the savings can be very significant for someone that really uses that 10-year holiday.
So worth picking up the phone to Fred and checking in if you're all considering.
And you'd be amazed. Some people, there is planning that can be done. We can make you a non-covered, and you can really go with it. Very
cool. Fred Kahn, that was very enlightening and hopefully interesting enough so that even those who aren't tax professionals and don't get excited by tax like you and me found something that they could learn and of interest. So appreciate you being on the podcast.
My pleasure. Thank you for having me there. Thank you.
Okay, great. And to all of you listening, thanks for supporting us. We see our subscriber numbers go up, and it's really quite wonderful. So thank you to all of you, and we look forward to presenting more interesting podcasts coming to you soon. Be well, B'sorot Tovot. Bye-bye.